2 days. That's how long it took for tech and AI stocks to go from "we're all going to be rich" to "is the entire market on fire?" Now imagine that exact panic. But the people panicking are the new bosses of the Federal Reserve, the people who literally control the price of your mortgage, your job market, and the value of your portfolio. If they get this wrong, your tech stocks, your crypto, even your safe index fund can get crushed. Without any earnings report, without any scandal, just because a few people in a room misread AI and inflation. Today on the comment section with Thomas Paul, we're breaking down what the recent carnage in tech really means, how the new Fed leadership is likely to react, and how that feeds into the AI arms race in the 2026 elections, and yes, what I'm personally doing with my money. Here's where things get interesting. Let's start with what just happened. If your portfolio has anything that smells like software, cloud, or AI, the last 48 hours probably felt like a horror movie. High-flying tech, AI darlings, even solid names with real profit all got hit. It wasn't one stock, it was a wipeout across the board. So what triggered it? Not AI is dead, not tech is over. The real answer is much more boring and much more dangerous. The market suddenly had to reprice risk. Rates are high. The Fed is stuck between inflation is not dead and the economy can't take more pain. At the same time, big tech is spending insane amounts of money on AI data centers, chips, and power. Investors finally looked at those bills and said, "Wait, when do we get paid back?" That's the perfect storm. Higher rates, expensive hype, slower growth, and a crowd of traders who all sprint for the exit at the same time. But it's even getting worse because while retail investors are doom-scrolling their brokerage apps, the new Fed leaders are watching the same charts and asking a very different question. Is this just a tech tantrum or the first crack in the whole economy? If they think it's just overvalued AI stocks deflating, they do nothing. Let it burn. If they think it's systemic, they might pause rate hikes, cut sooner, or quietly shift their language. And here's where things take a step further. The Fed doesn't just look at inflation and GDP anymore. They're staring at AI productivity claims. Will this tech actually make the economy more efficient? Corporate capex. Are companies blowing cash on AI toys or real tools? Labor. Does AI kill jobs or just change them? If the new Fed bosses decide AI is mostly hype and not real productivity yet, they have to stay tougher on inflation. That means higher rates for longer, lower valuations for growth stocks, more pain for unprofitable tech and speculative AI plays. If, on the other hand, they buy the story that AI will make everything cheaper and more efficient, they might tolerate more spending and more volatility today, expecting future productivity to bail us out. But then the unbelievable thing happened. Markets didn't wait for a careful academic answer. They did what markets always do. They overreacted. Traders didn't calmly rotate. They nuked everything with a software label, good or bad. Companies with decent earnings and real cash flow got sold off just as hard as the meme-level AI will monetize later crowd. That's how you know it's not rational stock picking. It's pure fear and forced selling. This is exactly why most people lose money in times like this. They confuse volatility with a verdict. A 2-day crash feels like the universe telling you, "You were wrong, get out." When really it's just leverage, algos, and panic slamming the same sell button on the same sector at the same time. But then he said this unbelievable thing: you don't need to predict the next 48 hours to be a good investor. You need to survive the next 48 hours without doing something stupid. That means not chasing hype when times are good, not rage selling quality when times are bad, actually understanding what you own. This is where my own early 30s experience hits home. Everyone around me was throwing money at whatever was hot that week. I put money into something boring and unfashionable. It didn't moon. It just worked. Slowly, year after year. That's when I stopped believing in once-in-a-lifetime trades and started believing in not blowing myself up. In terms of how I plan to invest, here's the rough checklist I'm using right now when I look at tech and AI. 1. Is this company actually making money, or at least on a clear path there? If their entire story is, "we'll figure out revenue later," I treat it like a lottery ticket, not a core holding. 2. How exposed is it to higher rates? If the whole valuation assumes free money forever, pass. I want businesses that still make sense if the new Fed bosses keep rates elevated longer than the market expects. 3. How real is their AI? Are they selling actual products or just stuffing AI into their slide decks to juice the stock? I don't pay a premium for buzzwords, and here's where things take a step further. We also have to think about politics. The AI arms race is now a policy problem, not just a tech problem. In the run-up to 2026, you're going to hear, AI is stealing jobs. AI is a national security threat. We need to regulate big tech's data centers and energy use. New Fed leadership, new Congress, new regulations. That's the triangle that will define the next decade for tech investors. If regulation comes in heavy-handed, it could slow down smaller AI players and actually entrench the giants. If it comes in targeted and smart, it might reduce the dumbest risks, but leave room for real innovation. Either way, your portfolio is sitting in the middle of that fight. Here's where things get interesting. Because while all this chaos is happening, there has never been a better time to be a creator or an investor who actually uses these tools instead of just buying the stocks. This entire channel runs on an AI pipeline. This video was created with Fludge.io, the same system that powers this entire channel. If you're watching this and thinking, I'd love to run a YouTube channel like this, but I don't want to be on camera, this is exactly for you. Fludge researches, writes scripts, builds thumbnails, uses an AI avatar, and uploads to YouTube automatically. Your job is basically to sanity check the content and hit publish. If you're a control freak like me, you can jump in at any step. Do your own research, rewrite the script, record your own video, whatever. Over time, it learns your style and gets better. So while big tech spends billions building the AI picks and shovels, tools like this let normal people actually use the gold rush without quitting their day job. If you want that unfair advantage, check out Fludge.io. But it's even getting worse. If you ignore all of this and just keep treating the market like a casino, the new Fed bosses, AI regulations, and tech cycles will eat you alive. Not because the system is rigged in some cartoon way, but because the game is being played on a time horizon most retail investors refuse to use. Here's the mindset shift. Stop asking, will AI stocks go up next week? Start asking, in 5 to 10 years, which businesses will still be around, still printing cash, and still relevant in an AI-first economy? So in terms of my own investments and how I plan to invest, here's what I'm doing. I'm keeping a boring core, broad indexes, profitable large-cap tech, companies with real free cash flow. I'm limiting my spicy AI bets to a small, defined slice of my portfolio, an amount that can go to zero without wrecking my life. And I'm assuming the Fed will stay tougher for longer than I'd like. If I'm wrong and they cut sooner, great, upside surprise. If I'm right, I don't get blown up. Nothing here is financial advice. This is for education and entertainment only. You should do your own research and talk to a licensed professional before making any decisions. But then the unbelievable thing happened. If you zoom out, moments like this tech sell-off end up looking like tiny blips on a long-term chart, unless you panic and lock in losses at the bottom. So I want to hear from you. How are you playing this AI chaos? Loading up on quality? Hiding in cash? Chasing the next hot ticker? Drop your plan in the comments. I read as many as I can, and the best ones usually turn into future episodes. If you got value from this breakdown, hit like and subscribe to the comment section with Thomas Paul for more deep dives on finance, AI, and the politics that move your money. I'll see you in the next one. Stay calm, stay skeptical, and stop letting 48 hours decide your entire financial future.